There's a woman who never saw a single sunrise. She never watched the light break across the mountain. She never read a face across the dinner table. She never once looked into the eyes of someone she loved. And yet she saw further than almost any human being who's ever lived. Helen Keller said this: "The only thing worse than being blind is having sight but no vision." I've spent nearly 30 years sitting across the table from people who are incredibly successful. People with strong careers, healthy savings accounts, 401k statements that look quite impressive on paper, and watched as they experienced anxiety, and those same people stare at their retirement projections and feel afraid to spend to live during inflation, afraid to give to charity because of uncertainty. Not because they didn't save enough, but because they built a plan for depletion, and they called that security. Today, I want to invite you into something that's different, not a product, not a pitch, an invitation to vision. Let me show you how the traditional retirement model actually works. Imagine your entire financial life is a bathtub over here. For 30 or 40 years, everything flows into it. Your contributions, your employer match, market growth, compounding returns, the tub filled slowly, faithfully, beautifully. And then you retire, and the arrows flip. Now everything flows out. Living expenses, healthcare, taxes, inflation, the car that breaks, the grandchild's tuition, the parent who needs care, the crisis you didn't plan for. And what flows back in? By design, almost nothing. Just a drain. Slow at first, and then faster. And one day someone draws this line on your projection and says, yeah, and eventually, one day it runs out. But most likely after you expire. That moment, that quiet, terrifying moment, is not a planning failure. That's a vision failure. And here's one part that few people talk about. For high earners, your tax bill is not a line item. It is your single largest lifetime expense. Larger than your mortgage or housing, larger than college or tuition, larger than healthcare. Your most reliable financial partner is Washington, D.C. And I appreciate the protections and services I receive in America, and don't mistake this. Yet you will leave most of your earnings to your Uncle Sam if you do not create a tax strategy. If you followed our tax code's incentives, you could manage your tax bill much better. Real estate offers many tools to reduce your taxes and keep more of your capital and income working. But for now, let's go back to the bathtub. You worked hard, you saved faithfully, you got the deduction going in, and now every year in retirement and every month, you pay taxes on the harvest, a little at a time, for as long as you live. If that makes you uncomfortable, maybe discomfort can be where vision begins. Let me offer you a different picture. Let's say an orchard. If you owned an orchard, would your retirement plan be to cut down every tree and hope that the trees and the wood outlast you? Of course not. You'd harvest the fruit, you'd care for the roots, you'd never burn down the very thing designed to feed you. Yet, that is exactly what most retirement plans ask you to do. Sell your assets to fund your life. Liquidate to survive. Spend down what took a lifetime to build. The advisor's marketing and pamphlets explain that index funds capture all the upside and the diversity and all of the safety, and in some cases, they're right to a degree, on average, not every decade. But you just have to sell them to survive. And they're earning a living, and they mean very well. And you're saving in what you understand and what you've learned over time. You might be offered dividend stocks or funds with 2 to 4% returns. But the shift I'm inviting you into is profound to live, from depletion planning to production planning. From how much do I withdraw to how do I own assets that pay me? That is vision. Years ago, as an undergraduate at UNC Chapel Hill, I worked for a major insurance company as a college unit director managing 20 agents. Because our team performed well, they flew me up to headquarters a number of times, and as a young man, I sat across from the head of investments for one of the largest life insurance companies in the United States, while he projected and explained that Northwestern Mutual Life had the strongest investment returns in the country, the lowest expenses, and the healthiest insured, so they could pay larger and larger dividends to their policyholders. There were no stockholders or shareholders. And I raised my hand. I said, "Sir, can I ask you a question?" He said, "Go ahead, David." He said, "I'll bet your team is crushing it in equities in the stock market, aren't you?" And he smiled this kind of smile that says, "Son, you have a lot to learn." No, he said, we invest a little, but not very little in that. We can't predict when there will be another 1929, another 1945, and number 1973 or 74, a lost decade or something. Banks fail, David. Investment banks fail. Companies fail. Brokerage firms fail. We cannot do that to our policyholders. We cannot predict their returns without risk of loss. And I was stunned. And I said, "May I ask what you invest in?" He said, "A lot of commercial real estate, a lot of private equity, a lot of multifamily apartments, assets that are needs-based, assets tied to human life. Rents grow over a decade. Values grow through good management. We invest in things that will not go away." In case you didn't recall, more than 25% of the stocks that started in the S&P 500 are gone today. And maybe between 10 and 15% of the original 500, there's probably maybe 50 or 60 companies that still hold their spot. That is not security, nor a long-term stable or strong plan statistically. We have to chart and navigate for decades and even centuries here. Then he looked at me and asked, "Do you live in an apartment, David?" I said, "Yes, sir." He said, "Have rents gone down since 1945? And he continued. He said, "We are stewards. Our policyholders trusted us with decades of their earnings. They hold policies for 30 to 60 years or more. They expect more of us than hope and speculation in trends. We must protect their capital and earn stronger than market returns with less volatility. No lost decades, no years of, 'I'm sorry, we're out of money because public opinion of our stocks, believe our stocks are valued lower, we can't deplete them to sell, we can't pay you.' That's not us, and not a steward. Our policy owners actually own the company. They vote for who manages their funds, including myself." Then he said something I've never forgotten. "David, university endowments, pension funds, teacher retirement funds, state employees retirement funds, hedge funds, the wisest long-term stewards in the world invest this way. This allows us to pay our dividends stronger, faithfully every year. You just may not have been exposed to it yet. As you continue your studies, you probably will be exposed to this, or should be. But if you research this, you'll find that more than 25% of a lot of the major cities in the United States of their apartments are often owned by these entities, these endowments and hedge funds, insurance companies, pensions that people count on to outlive them." But I do appreciate your question, and I appreciate you having one of the top 5 teams in the United States, in our country. Thank you for that. That conversation planted something in me that has grown for 30 years. My question to you is, could you learn to think like this, like a steward, not just for the next few years, not just for your own comfort, but for the decades ahead and the generations that will follow you? Let me bring it close to home. I'm going to call a friend Tom over here. Tom did everything right. Strong career, strong income, maxed out his 401k for 20 plus years. If you looked at his statements, you'd think he was set. But his projection had a line that went up for decades and then kind of flat and then kind of down. He said, "What's that line?" he asked. "That's retirement income," his advisor said. "Once you stop working, you draw down and eventually it runs out." Long pause. Tom was quiet for a moment. Then he asked the question that changed everything. "Is there a way to build retirement on income instead of depletion?" That's when we started talking, not about becoming a landlord or midnight toilet calls or repairs, but about participating as a passive investor in professionally managed apartment communities, the way that stewards, retirement funds, hedge funds, and insurance companies invest, where income and value improve through real work, not public opinion. Over time, Tom reallocated a part of his stub into income-producing assets with stronger tax advantages in markets with durable and growing housing demand. Instead of owning only paper he had to deplete or sell to live, he now owned engines that paid him, that gave him tax breaks that allowed much more of his capital to keep working, less went off to taxes. That's the shift from "I hope this lasts" to "I own something that pays us." That is vision. Shelter and multifamily and real estate are not trends that may be outdated or replaced by AI in a couple decades. These concepts are 5,000 years old. When the economy gets shaky, people postpone vacations. They may delay car purchases, technology upgrades. Sometimes they may even delay needed health care or buying a home. I actually watch a lot of retirees think this way in anxiety because of the depletion model. But there is one bill nobody stops paying. 35% of America now pays rent. In 20 years, projections are up over 37%, up over 34% a year ago. That is why the pension funds, endowments, insurance companies, teachers and retirement family offices allocate billions into apartments. Billions, as limited partners or as equity partners or as creditor debtors. No on-site responsibilities. This is called private equity. They want regular income, stability, tax efficiency, inflation resilience, where the values go up with inflation, and they want returns that will outlive them. Question: do you have to be a pension fund to think like one? Let's propose a different retirement model. Let's say you still have a bathtub. You still have to spend regularly. But you install pipes at the top. Pipes that bring in distributions from income-producing assets. Tax benefits that keep more of your income working. Reinvested cash flow that keeps building your base. Life is full of expenses, many unplanned. But when the inflow becomes strong enough and disciplined enough, that drain stops controlling your emotional life. You stop asking, how low is the tub and how low is the flow of water? How high is the index today? You start asking, how well is our system producing? Folks, friends, that is a quite different retirement where your generosity and your peace can become perpetual, not tied to anxiety or fear of depletion. I want to close with a woman I opened with. Helen Keller was blind and deaf and couldn't speak for the first 7 years of her life. Yet she traveled the world, testified before legislatures, wrote books that are still read today. She inspired movements that are still growing. She joined the American Foundation for the Blind in 1924, not just to advocate, but to build. And she raised $2 million at a time people thought that was nearly impossible. That endowment, built through conservative stewardship, disciplined generosity, and her vision, is now worth over $41 million today, according to their most recent statement. She could not see a single thing. Helen Keller died in 1968. She's been gone for nearly 6 decades, yet she left a light that would shine centuries beyond her life and death because she planned for this. And her vision is still feeding people, still blessing others today, and her vision will outlast us because she planned it to. I'm almost inclined to ask WWHD, what would Helen do? I've learned that the most generous people I know are not the wealthiest. They are the most intentional. They structured their assets to produce, not to deplete. They built plans that could outlast themselves and bless people who came after them. I'm not here to tell you what to do with your money. I'm not here to sell you a product. I'm here to invite you to a different way of thinking, the way stewards think, planning your vision. If something stirred in you today, if you perceive a depletion problem in your planning and you want to explore what it looks like to earn income-producing assets that outlive you, my team and I would be honored to have that conversation. No pressure, no pitch. Just a real discussion about where you are, where you want to be, and whether this fits into your vision. If you'd like, I can provide you with an ebook or passive income playbook that details how passive multifamily investments work. It is simpler than you think. Just ask for it. No obligation. So here is my final concluding question for you today. What if your strongest financial years are not behind you, but waiting on the other side of one decision. Can you choose to build a vision, a future that must not be spent down to live and thrive? Could you build a future that produces, protects, and provides so you can live more, bless others more without fear or anxiety because you traded depletion for a vision that can outlast your years with great impact? Thank you.